Smartdex is the first DEX with a real solution to impermanent loss. Smartdex is transforming the DeFi landscape, catering to liquidity providers and smart traders who want to benefit from low fees, farm DeFi highest APRs, and trade effortlessly on Smartdex.io.
Good afternoon, everyone. BC Richfield here, coming to you a little bit later than planned from London, and we are live. It's 5 minutes past here. Deep apologies to everybody that's been waiting around. I see a load of you in the chat. Absolute legends and soldiers, every one of you. As is quite typical for boomers like me, there's been a couple of technical issues this morning. And also very, very fortunate to be working with a good friend of mine on some Forex stuff, which is why you can see this up here on the screen. So how are we all doing? Good morning, Hans, my friend, Erica, our lovely Erica as well. How are you guys doing? Where's Craigie boy? There he is. Good morning. Our wonderful Kelly Barker, all the way from New Zealand. How are we doing, guys? Whack in here as well. You absolute beauties. And James 14. Good morning to all. James will have one little cheeky eye on the FX chart that's up there. Was just looking at some London session moves, actually looking to kind of add that a little bit more to the repertoire, but I will not bore you with that. Jao Conde, apologies if I've horrifically pronounced your name there. What a beautiful Latin name that is. So how are we doing, guys? Is everybody well? We're all doing. Good morning to you as well, my friend. Do you know what? I'm starting to feel a bit better, like I'm coming out of the woods on this kind of illness that has been with me for literally months now, on and off. Need to get myself to a hospital in the UK, which isn't, believe it or not, even in central London, a very easy thing to do. But I'm feeling quite good at the moment, and I'm feeling really fresh and just really want to kind of just dig in and grit into some alpha with you guys. So, in a short from 185.96. You beauty. Cool. Nice. Very, very nice. What are you on, brother, from that? See if it's what I think you are. But awesome. So last few weeks, we've been kind of going over our daily bias, right? Looking and saying to ourselves, okay, what are we looking to trade? How are we looking to trade it? And one thing I just wanted that we've kind of been stressing about in terms of making sure we're aware of it is where price is, nice, is where price is delivering from, yeah? So a lot of people, I think, get a little bit confused or kind of overlook or look too deeply into market structure. And let me just kind of give you a visual representation while we're here on GBP USD and while we're on cable. You can see this is a training chart that I use, right? And this is all based on, these thick red lines are our daily bias, thinner red lines are our intraday bias, which is our 4 hour. Yeah, pound yen. I did think so. Funny enough, a good friend of mine is an absolute animal trading pound yen. I typically somehow seem to just get my ass kicked by Japanese pairs or by the New Zealand or Aussie dollar pairs as well. They just seem to absolutely love smashing me. But I've got a very, very good relationship with GBP USD, Euro USD as well, which I find is a really good pair. Whack, my man, how are we doing? Hi, BC, hope you're well. Missed Monday's due to the 9-year-old's birthday party. Awesome, man. Congratulations. If it's yours or if not, I hope it was still a good party. But love the run through using Monday's range. I managed to get in on a few of them too. Awesome, man. That is absolutely brilliant. Also known as the Beast. Yeah. Mate, that's awesome news. So I'll take a really quick look at that, guys, as well for a minute. I'm really glad that's been helpful. I used to trade Monday's range literally religiously. And it's really good for crypto pairs as well. I, have my traditional trading methods for FX and equities and crypto, which can all be slightly different, but realistically, they're all based around the same bias-based system, yeah? Now, forgetting the lines and bits and pieces on the charts, what I'm looking for is market dynamics. How's the market moving and what is it respecting? Okay, so let's just focus on recency. And I was just running through this with a previous student of mine who's coming along leaps and bounds in terms of moving towards getting funded themselves. So here, it's quite simple for me. I really like to simplify it. Let's just start from here, right? Let's just put a green line just here, yeah? So here, right, we can see we've kind of got this chop as we're moving around. We're asking ourselves what is being respected and also what's been swept, yeah? So as what I would consider myself would go on my CV as a liquidity hunter, probably because it sounds a lot cooler than it really is I'm looking for, is price reaching for liquidity above an old high or below an old low, or is it looking to rebalance an inefficiency, right? So is it looking to rebalance a fair value gap? Now I'm looking at those as points of delivery, right? And as I always say on these streams, because I think it's always really important to pay homage and respect to people that you've learned these from. So I haven't come up from these concepts. I've studied them off a number of different traders, but big influences for me were ICT, who I was fortunate enough to be on his core mentorship for the original one, right? I learned a hell of a lot from that, learned a lot from SZ as well. Whatever the way that you look at this, then the key thing is that you just need to be consistent, right? So back test this stuff and always go to the source to learn it, right? But I'll teach you and tell you, or just share with you what my application of this is. So let's just focus on the green line for now, and we're staying on the 4 hour. So I'm asking myself, as we step into this day, are we bullish or are we bearish? Yeah. So I'm bullish stepping into this day. And why am I bullish here? Because of this bullish fair value gap, which I'm just going to do in green so it stands out. Yeah. Now, okay, bullish fair value gap. What happened? Price dropped back below this here. Yeah. In which case, we then from this candle would have a bearish bias. Yeah. Why? Because we've violated this. And that now becomes an inverse fair value gap. So we do these in purple. Yeah. However, remember what I said, we're either looking for what price is doing regarding the fair value gaps or order blocks, but with a focus on fair value gaps. But ultimately, we're looking for liquidity to be taken. So we see when liquidity is swept here, yeah? We take liquidity, what do we then do? We then close back above this, yeah? Now, you don't want to get too caught up using multiple times with fair value gaps, right? First time this is bullish, should hold, doesn't, breaks below, becomes an inverse. Now, as we start getting a few candles away, that then becomes irrelevant to me. However, if we sweep liquidity and immediately have a strong close back above it, this is telling me that price is getting ready to move higher, all right? So we're now in a buy program. Ultimately, with a buy program, what's our expectation? That price is reaching for the nearest most available liquidity, yeah? So I'm just going to get rid of this green line because you can all tell now that we're bullish from this point, right? So all we're then saying to ourselves is, okay, well, where are we still bullish from? Yeah, so we're bullish all the way until we get to liquidity here, yeah? So we trade it up to here. Would we be looking to long from here? No. What's our expectation? The price is going to pull back to rebalance this and go higher. So we'll do that in green because until this price action plays out, we're bullish here. Now, why am I bearish from here? Because we've closed below a bearish fair value gap. So this, to me, now becomes irrelevant, right? From down here, I'm now expecting price to draw into this bearish fair value gap and drop lower. What would change my bias? My bias would change if we closed above this. I would then expect us to attack this high here, right? So if we close above that, we move to a lower time frame, look for price to find support there, and we trade it up into here. Now, that may not look like much of a move, but I can assure you by the time we get onto an executable time frame, yeah, that is more than enough on that. 290 points or 28.9 pips. That is a big trade on a low time frame, right? So we're short. Why was I short this morning? We can see this and we're going to go into this. I wanted to set this trade up this morning for you guys, which I did with one of my mentoring clients as well that we just ran through in a really good session actually. So set this up to just show the reason as to why we're trading these, right? Because we're just respecting the recency bias, yeah? So I'm not so worried about market structure here. If I wait for a market structure shift, I've got to wait for this to be closed below. Okay, we get involved here. But what about this? By the time we get our shift in here, we don't get an opportunity to go long. However, using this, focusing on the more dynamic approach to where price is delivering from, allows us to be long in here and get all of this coming up to here, yeah? So we know where we're short from, yeah? We have the strong close back above here, so we know where we're long from. Yeah, we're still short today because obviously we're delivering from this fair value gap here down to here, and now today, we're delivering from this fair value gap. Yeah, lower. Ultimately, that looks like the clear and obvious liquidity resting down there, right? Now, let me just clear some of this old stuff up quickly, and then we're going to dive onto a lower time frame, because a few people last week said that they'd be really, really interested in looking a little bit more about execution. Yeah, so that is absolutely fine. Obviously, guys, if any of this is going too fast, or you want me to stop or kind of go through this again, we can do this, but I think I just want to run through this with you on this one and show you this on a traditional market asset, and then we can flip, yeah, and we'll start and get back into our alts, yeah. So we'll take some recommendations that you guys have got, and then we'll do this exact same thing on there and see how it relates to crypto. So in here, long bias here, short bias here. Now let's drop down to our executable time frame. In this case, we're going to favor the M5, yeah. So we'll work it back just because in terms of how the data sets present itself. What have we got here? So here's our red arrow, yeah? That signifies that we are delivering from a bearish fair value gap, right? I want to wait for the start of the London session, yeah? 7 a.m. here. What do I need to see? I need to see a shift with displacement. Here's our low, yeah? Or if you were looking for a fractal low, it would be this one, right? But that's still a relevant low because it has a higher low and a higher low, right? Boom. That's the move lower. Now, when we get to here, the key thing for me is that that's my main target here. Oh, I hit the bloody space bar again, haven't I? Do you know what? I keep doing that. Let me just get back onto that, guys. 1 second. So the reason I'm stressing this about what our main target is because we want to be aware of it. If we're not aware of it, right, then people can force getting themselves in positions where liquidity's already been taken. So you see this? Yeah? That's our main target. So when price had this drop with displacement, which was finished here, we hadn't taken our main target, right? So I'm sticking in line with my bias, which is that I want to be taking an entry up here, ready for this to then attack liquidity lower down. All right, does that make sense? So all I'm saying is this represents the fact that I still have a short bias, yeah? And this is exactly the same. 2 trades here, in fact. I got into this one early, but it triggered the system, which was absolutely right. We got stops taken at entry, so we didn't make any money on this trade, but we didn't lose any. Theory was we would come down and attack these lows. Why? Exactly the same reason we were talking about. We're delivering from a bearish fair value gap. So even if we're not, in this case, going to go all the way down, the chances are that you're going to have some kind of reaction here, and that's what we can get involved in. As it turns out, yeah, this was the move that we wanted to be involved in. Still in the New York session. Here's our low. There's our beautiful fair value gap, right, that's left with displacement here. That's our entry. Targeting down here, stops above this high, right? So does that make sense, guys? As we're looking into this, we're remembering, okay, look, all we're doing is every day we're just going in and we're trading our high time frame bias, yeah? Which in this case is obviously dictated by the fact that we've got those 2 big vertical lines on the screen, yeah? You can see in here, again, for me, trader of the New York session, these are 1-minute trades, so they do look a little bit small here on the M5, but same principle. Taken liquidity, right? Swept liquidity, broke down with displacement, trading into these lows, right? I looked to counter trade this, yeah? This was obviously on Monday. As I said to people, these trades were not taken live, purely for the reason that Monday was a low probability trading day for me because we had Labor Day in the States, right? However, if it wasn't, I still would have taken both of these trades. As you can see with this sneaky little blighter, it came down and got us a double sweep in there before taking off, but that's fine. That's a counter trend trade, yeah? High time frame's bearish, so we would have entered this with half a position size, all right? And even if you hadn't, just take the 1R loss. Yeah, you take the 1R loss, it's all part of the game. If you think about it like this, if you have a trading system that your average win returns you 2R, yeah, and you stopped all of your trades out at 2R and just took that profit, if you're 50% win rate, you've got a very profitable system there, all right, even including higher fees that you can get on crypto exchanges and stuff like that as well, okay? So here, yeah, remember, this is where we've switched. We've got our big red line on here showing us that our high time frame bias is now bearish. And all we're looking for here is shifts and inefficiencies. But we don't get any, right? See in here? See how tight the price structure is? Price isn't telling you that it wants to move, is it? And you're not always going to be right. Sometimes you get these little kind of muddy displacements. Price pings up and then just drops. Doesn't matter, because more times than not, if you don't see something clear and obvious in here, it's just better to sit on the sideline, guys. You know, you need to remember that protecting your capital, right, is just as important as just taking trades. Yeah. So here we have a counter trade. Here, right, swept liquidity above the highs. We can see the red line. Price breaks down. We ultimately look to chase below these lows, which we get to all the way over here in the next day's London session. Yeah. However, our bias is actually bullish here. Yeah. So we would have been looking for our setups here in the London session. We can see we get a sweep. See the displacement here? When I say kind of clear and obvious, Maori, hey buddy. That is an awesome little logo. I love the fact you've got your own kind of like your own sticker for that as well. So sweep, taking a local low. Look at the displacement here, right? High time frame bias. That looks obvious, yeah? Then we went up, dropped into here, more displacement, target this to go higher as long as we've got higher targets, okay? So hopefully that wasn't too waffly for everyone. I've got, by the way, I've got so much stuff on this BTC chart that I need to clear up. So bear with me for a minute, because it's really, really hot, surprisingly and very strangely here in London last couple of days. And I had so many screens and discords and bits and pieces running. I really do need to just completely clear this out, or maybe just get myself a new Mac, because I do feel sorry for it. The poor thing has really been struggling lately. But as is quite often, I say that, and now it is absolutely fine. So first of all, Craigie boy, for BTC, I just think BTC looks like crap at the moment. It's not something I'm looking to actively trade. And let me just tell you for why. And this is a really, really good question. So, and this is a really good point. It made a nice move down to sweep a low, but moved out too quickly. Yeah. Just short trade. Do you know what? I knew someone once that basically just got so caught up in trying to build this specific trading system that they wanted to do, and it just really wouldn't work. And we were part of a little trading team together when I first got into the game, and we used to just counter trade all of his trades, and it was probably to this day still one of the most profitable trading systems. Was just counter trading, and he'd made the chronic mistake of he wanted to beat the market so badly. He wanted to enforce his principles on the market rather than looking at what the market was telling us. So I'd be interested if you would have found a trade. Cool, let's take a look, right? So this is our Bitcoin chart, right? These lines down here are just our day dividers, okay, guys? Craig's endorsing the system. Brilliant. So what I need to see is clear and obvious, yeah? So what do I mean by that? Where's our fair value gaps? Where's price delivering from? Or what is capping price? What's capping the market? Yeah. Now, as soon as I look at this, there's only one thing I see straight away. Yeah. And the thing that I see straight away is this. For me, that order block there is what's capping price. Yeah. Price is just kind of caught in this choppy range. That's why when you see things like this start to develop, get into your ranges, yeah? We are having a heat wave. I mean, for us, Whack, this is probably like your winter. But to be honest, we're so ill-equipped for weather in the UK. It's normally cold, but sometimes it's really hot. rains most of the time, but sometimes it doesn't. Our humidity gets off the scale. And then when it's hot, the tarmac melts and no one wants to go outside because it's too hot. When it's too cold, all the tarmac splits from where it was too hot in the summer. That's why the Brits complain so damn much about the weather, right? We get no consistency. So in this case, there's nothing clear and obvious, right? What do I mean by that? Well, if we go back here, what's clear and obvious about the price action here? Well, quite simply, we've got this big, beautiful bearish fair value gap that tells me that I need to be targeting shorts, right? Now, when do I change my bias? Well, I would change my bias if price, rather than coming into here, had closed above this. I then look for pullbacks here, attacking this liquidity here. Clear and obvious liquidity above here, right? However, we didn't get that. So at this time here, which I think is probably about at 1 o'clock, we step into our New York trading session here. We are looking for price to run a higher into this bearish fair value gap, right? And then all we're looking for is for price to then attack lows. Immediate lows here, prior day's low, prior day's low, and ultimately liquidity further down. So let's say we entered roughly here. We won't take it right the way to the top. Do we have at least a good 1% trade here? We've got a 1.62, yeah? That's a more than big enough trade, yeah? So do you see what I mean, though, by we've got clear indication here that price is bearish? What else can tell us that? Well, we have this slither of a fair value gap here, which should have been bullish. So this should have been green, meaning bullish fair value gap. When we closed below that here, this becomes an inverse fair value gap, yeah? Meaning we see this now as resistance. We then combine that with the fact we have a bearish fair value gap here, and all we should ever be considering are shorts from here into intraday liquidity targets, right? So I hope that makes sense. Now, what we've got here is not clear and obvious, right? There's this huge fair value gap, two huge fair value gaps here that we could look to target, right? Ultimately, if we're looking at this in the same vein, this was our big bullish fair value gap. When we had that big expansion higher, I did tell people we need to be cautious here. This could easily be a deviation, a fake out before price rips down. If it's not, while it was bullish, we were hunting longs in here, right? So we got some nice long setups, right? Look, long from here, where are we targeting? Obvious liquidity, right? That's the swing higher. Yeah, so within that move, let's say we got into it here, up to here, another 1.2, 1.3% trade. That's more than enough. However, when price then fails to go any higher than this, what happens? We sweep this higher, we're looking for long trades here, but all of a sudden we start to drop. There's no long setups here, right? So then when we close below that on this candle here, this becomes an inverse fair value gap again. That's the candle that closed below. We don't care about the ones that wick down. So from this moment here, we're bearish, yeah? Lower time frames, we look for price to pull back here in our New York session. This is 1 o'clock again. And then we're looking for price to drop down, yeah? Beautiful. Crypto King, no support there. Not sure what you mean, mate. What, as in just down here in general, we can see these long downside wicks, which means we're getting buying pressure step in as price go up. But what I'm kind of trying to look at here is recency, yeah? So if we're looking at that, we're below an inverse fair value gap. We've got these bearish fair value gaps above as well. For me, I'm still maintaining a bearish bias here on the 4 hour, right? This is the time frame, the daily and the 4 hour, which I really use to establish my bias, all right? So because this is all so messy in here, what do? We're just chasing liquidity day to day, all right? So what can we do to refine this down further? We need to appreciate the lower time frames that we move down onto, yeah? We need to show caution, yeah? For me, the 4 hour and then the daily, yeah, are the real kind of go-to. Sorry, mate, Crypto King, after the pump, the consolidation at the top. No support there. Yes, absolutely. So again, big rip up. So what Crypto King's talking about here is, I think, this big rip up here, yeah? The fact that if you zoom out, right, you've not got really any historical support here for this to have reclaimed a level and find a new level. You would maybe look towards this high, or maybe the bodies of these candles because they align with these wicks here, right? But ultimately, as you can see, you just carved right through it. The dangerous thing here as well is in these really inefficient moves, as these things rip higher, then, you know, these often get retraced. So that's a really good point. There's no support there for it to hang on to. Now, as we drop to our hourly, and why are we dropping to the hourly to get our bias? Because we just simply don't have one on here. we're below this order block. While we remain below this order block, I'm favoring a bearish bias, right? Meaning that once we set this, price came back into here, right? I'm looking to be bearish here, 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 and here as well, right? So for me, because I have a focus on the New York trading session, okay? So that's going to serve as a reminder just on there to say, okay, we still have a higher time frame bearish bias, yeah? So we'll look to our arrows. Now, if we're looking to the 1 hour and saying, okay, what does the 1 hour tell us? Is there anything we can get involved in on the 1 hour? Yeah, so in line with our high time frame bias, we've come into this, yeah? But what are we really getting here? Are we any really clear price action here either? It's all just very kind of choppy, very messy, isn't it, right? So there's what I'm looking for here, by the way, guys, is I'm looking left to be in line with my high time frame bias. I want to see a clear and obvious fair value gap, ideally, right? Or an order block, but we have our H4 order block here. That's what I want to see us pull into whilst we're in these blue boxes. So we do get a pullback up into here in the blue boxes, and we do get a short into equal lows, but not on the hourly, right? Is there anything more obvious here on the hourly as we step into here? No, still the same order block, right? Now, for me, this is different. Let me tell you why. So as we start this day and I'm monitoring price action through London, I noticed that during Asia, we've created this bullish fair value gap. Now, as Asia develops, and I'm not trading Asia, as price comes in and holds this fair value gap, our expectation is if we want to flip our bias to bullish from bearish, we need to conquer and have a 4-hour close above this order block. We can see the wicks go up, come down, hold this. Now, the key thing here for me is when we then close below this, which we do on this candle, yeah, see the body closes below. Now, this becomes an inverse fair value gap. We're now looking at this as resistance. So we go to the start of our New York session, yeah, trading in here, price comes down, draws up, yeah, into here, and that's where we would be looking to take our short setups, right? So all we do is we can move down through the time frames, yeah? Hey, Yusuf, my friend. Yeah, of course. Let me just make a note of that, mate. FET. We can definitely take a look at that. Right, so now we're on the 15-minute, yeah? We're looking at the same. Is there anything clear and obvious in here, yeah? Balanced price range in here, price is drawing into it, the hourly still remains the same, yeah? That's the most clear and obvious target that we've got to look to go short from, okay? So from there, I'm decanting down onto a 5-minute. Yeah, and this is really where I'm looking to see price give me that indication that it's ready to move lower. Yeah, because I'm in line with my high time frame bias. I've worked my way down through the different time frames to see if there's any really, really clear and obvious areas that price can deliver from. And now just to go back to our inverse fair value gap. Right? Excuse me. What do we see? Now, we want to take into account our whole New York trading session, yeah? We don't want to cherry pick. Quite often with these type of trade setups, you'll notice that every once in a while, or actually it can be quite frequent, depending on what your trigger mechanisms are, you might get stopped out on an initial trade, yeah? So, but then don't let that put you off going back into a secondary trade. Remember, don't get too caught up on these low time frames. The majority of it is noise, yeah? And this actually, and it hasn't been cherry picked, I can assure you, but this actually gives us a really, really good example of that, all right? Oh, Matt, thank you very much, mate. Yeah, guys, if anything, Sdex. Friends at Smartdex, we're partnered with them, they're awesome. And Mexi as well. Yeah, no worries, Erica. We will take a look at that. And thank you again, Matt. Very kind. So, New York session starts here. Here is where I'm hunting for shorts. Yeah. What do I need to see in order to go short here, even on a 5-minute? Yeah. I want to see some kind of liquidity sweep, ideally. So, do you see how we take that higher? Yeah. Now, I need us to break the low. So this low, depends what your parameters are. I'm going to go for this one because it's also a fractal low. Yeah. Then we're saying, okay, we break this with displacement. Yeah. So for those of you that don't know what that means, it just means that we see a high energy move that leaves a fair value gap. So when this candle closes here, our entry becomes this FVG. We do that in red so that we can see that we're short from there. Take our short position out. We see we get tagged in about 10 minutes later. We then need to go for the local high, which is here. And I always go a few points above it, right? Just to be safe. Now what I'm looking for as I zoom out, right, is I'm going to look left for clear and obvious liquidity targets, yeah, that price is going to run into. Ultimately, with these type of systems, in truth, I very, very often use a set risk to reward, meaning that I'm more often than not, right, if I don't have a clear target, and we could have, as we zoom out, we'll take a look in a moment, at 2.5R, yeah, I look to trim some profit and move my stops flat. Yeah, so price gets into here, stops to entry. We see ultimately we get tagged out here. Now let's imagine for a second that we got into this move a bit late. Yeah, we missed the initial move. Then you kind of sit there and you're like, right, okay, well, what am I going to do? Okay, I've jumped in here and I shouldn't have done, and now I've been stopped out. A lot of people will then lose confidence in that. But remember, we're just looking for the same thing. We just want to see a little sweep on liquidity, right? We then want to see a break of a shift in market structure, yeah, within our blue boxes here that leaves displacement. So what do we have? Nice clean sweep there, right? Now, as we're looking for the lows, there's our market structure shift. We've stopped delivering higher highs, higher lows. We've now set a lower low. Do we have displacement? Yes, we do. In here. So that's our short setup. And actually with this one, we've got a pre-made liquidity target below this low. Yeah. So nice and easy to target that. We stop here, we get ourselves tagged in here, have to respect the swing higher, a few points above it. We draw this down to this low. Again, at 2.5R, I'd look to move my stops to entries to be safe. And we can see ultimately that what we would do is take, or what I do, definitely not suggesting you should do the same, but what I do is when I get to my target one, I'm then taking heavy profit, sometimes 70%, 80%, and then I leave a runner, yeah, that 20% in with my stop loss at entry in case you do get, you know, a bigger, more aggressive move down, in which case then I'm looking for market structure really when we start taking out old lows, all right, to then look to scale out. So does that make sense, guys? How we're kind of looking at that, how we use these areas, how we're looking at what we would do. So on Bitcoin here, Monday, I didn't trade this Monday, always very, very open and honest about that. All of our trades are obviously available for everybody to see at the Nest. So there's no hiding from it. I didn't trade Monday because it's a low probability day because we had Labor Day in the US, right? And actually, I normally like to see how Monday's range develops anyway. But we can see we would have got two nice little scalp trades out of the day here. And even if we got wrong on that one, we lose 1R plus our fees. We got a nice 2.8 winner there, okay? So we can stay with our conviction, I would say, is kind of my main message. Let me just look at a couple of questions here. Merck, could you please tell us which indicator you use for time zones? Yes, certainly. So this is actually one by a guy and another ICT trader actually that I met online called Dr. Fuse. No affiliation with him, right? It's a paid indicator. If it's something that you're interested in, come and tag me on Twitter and I'll happily do you an introduction. It's not a lot. I think it's $60, $70 or something for lifetime access. You can change your session times in here. You can add your lunch hour. You can take the labels off. You can make it. For me, I love it because it's just so clean. I can get my name up there as well, which is pretty cool, my time frame and stuff. So when you print out your charts or when you're kind of sharing charts, it gives it just a nice little edge. But for me, I just like how, you know, unobtrusive that is. So I hope that helps. Maybe if you really do want anything, do let me know. Erica, awesome, true. So Lil Bar, you know you're a trader at heart when you hit the rock bottom. The first thing you start looking for is a higher low. I absolutely love that statement. That is so, so very true. Guys, trading is always going to be as much about your mental state and control of your emotions as it is anything else. Believe me. I think for me, that's the big separator between very, very, very good or profitable traders and not. For me, I will always back a trader that has a mechanical way of trading their system. Emotions will always be involved, but someone that knows their data so specifically that as soon as they get a setup, they take it. And the other key thing is managing that risk. Good risk managers, money managers, will outperform exceptional traders. 9 times out of 10. I've seen it happen a lot. Larry Williams is a prime example, probably one of the most legendary traders of all time, won multiple winner of the Robbins Cup, which is basically the World Cup of trading. And I think one of his winning years, he did thousands of % returns, which was just unheard of. And I asked him and said, you must be literally the most talented trader that's ever lived. And he said, actually, I'm a very average trader, but I'm an exceptional money manager. Right? So always pay attention to that, because risk management and money management seems like the boring side of this sometimes, but it really, really isn't. Erica, awesome, crystal clear. Yeah, I did get those shorts Tuesday. Ah, nice. And think these in line. Brilliant. Yeah, awesome, man. Let's have a look. So, gone a little bit too far. Yeah, nice, man. I mean, look, you had opportunities to take these. I'll show you some ways that you can, if you're ever in this chop as well, and again, be very, very careful of your position sizing here, because your fees will hurt you, yeah? But if you're ever in chop like this, you can look for trades to be taken on lower time frames. So in here, for example, you had 2 trade opportunities, yeah? So that we can see right away. Now, same thing, right? We've taken out some highs here. Remember, these can be session highs as well. So you've taken out London highs here. We've got these relative equal highs here as well, which we can see. What do we get? We get that nice move higher. Price comes down. Yeah. There's our shift. We're looking for price to draw back up. I don't think it actually sneaks up into that inefficiency, but doesn't matter. Doesn't stop it being valid. I don't know if you guys can see that. Let me just draw it in for you, because it is a very, very skinny one. Right? Ultimately, we don't quite tweak into that, but that would have been a lovely trade into these lows. Yeah. Why wouldn't we have taken this one? Because we didn't break market structure, yeah, or shift market structure. However, we would have taken this one here. Again, when we have our sweep, we have our market structure shift here. We have our displacement in here. Do we tag ourselves in? That's the big question. Just. Just by an absolute nibble, right? And then let's see what we would get out of that. Maybe we get stopped out on this one. Let's see if we get to a point that we can put our stops to entry. That's a bit painful because we've got a really, really big one there. I think we'd want to go to at least 1.5. We do. We just sneak 1.5. And you'll be surprised how often you'll see this, right? I think we probably get stopped out up here. Yeah, runs these highs. So you've got your stops for 1.5. You don't make any money on this trade. Or maybe that's not your system and you get stopped out here, but you may get back in on one of the other ones. There's always going to be a little bit treacherous trading this chop, yeah? Where sometimes what you're better off doing, right, is, as we talked about before, is reverting to a range, yeah? So if we were to come into here and we're looking at Monday's range, yeah? So this is Monday. Sorry, I know this is all a bit squiggled up at the moment, right? But Monday's range, yeah, is Monday's high to Monday's low, yeah? So if we want to look at our range low, it's here, right? So we could counter trade like we do with anything. While we're in these points of consolidation, you're more often than not looking towards range or mean reversion trades, yeah? So we've got Monday's high up here, which we don't threaten, but okay, if you were up trading Asia, you would have got a nice long in there, nice long setup down here as well. Obviously looking to kind of take these on kind of lower time frames, down on like the 1 minute chart, purely because the size of the compression of the range, all right? So I'm glad that's clear. Let me just check back on the questions quickly. But awesome work getting those shorts in on Tuesday, mate. There was definite look, because you've got all these session highs, right? High of day here, yeah? You take that out, there's your short straight into New York. That's the money move there, yeah? And let me just show you that very quickly so you just see I'm not cherry picking that. That's your high of day, yeah? You can see how those candle wicks just sneak above it here, come back down, does it again here, back down again, here, back down again. Basically, when you get these tighter compressions, price is just moving between liquidity in shorter ranges. Yusuf, when trading using mother bar and inside bar, is it necessary to use the last candle or can we use previous ones? Right, so let's just zoom out on this a minute, mate, and let's see if I've understood you correctly. So what Yusuf is mentioning here is another form of range that we trade, yeah? So as we come up here, let's just get rid of all of this, just so we've got a nice clean chart. Save this as our live show, shall we, just in case we want to refer back to it. What is it today? 6th, isn't it? 6th of September. Wow, that really has flown past this year. So hide that, stop waffling on about time, and then we will take a look here. So what Yusuf is talking about here is inside bars, yeah? So it's known as an inside bar pattern, right? And it consists of 2 candles. It consists of any time that you have a large candle like this, or any size candle, actually, it doesn't have to be large. The key thing is the pattern confirms when you then have the second candle close within its range, yeah? Meaning that becomes the mother bar higher. This becomes our mother bar low. Inside bar high, inside bar low, right? I won't bog down too much on that, so we can look at these on some other charts. But the principle is, if we run a range high or range low and get back within the range, we then expect expansion to the far side of the range, right? Does it work all the time? No, as we can clearly see here, right? But I think what Yusuf's asking here is when we kind of prioritize, or what candles we prioritize. So for me, I very much look towards the origin, yeah? So if I get a really big move like this, yeah, see this big candle here, that's obviously a mother bar, and that's obviously an inside bar. Now, what we can see here is we are having a great time trading this inside bar. But what else is this? Actually, its own mother bar, right? Because then we've got this inside bar here. Now, for something like this, when we come off of a major drop, yeah, there's an expectation for consolidation, right? So there's our mother bar high, mother bar low, inside bar. They become a range within a range, yeah? So then, basically, Yusuf, what I would say here is it's kind of a little bit up to your discretion. For me, I'm looking for what, again, I use this term, but clear and obvious, right? The thing for me about that original mother bar is that it's just so huge, right? So as long as the mother bar is still in play, which this original mother bar is, yeah, then that's what we look to trade the liquidity of, right? Now, we can see here, just wait for this to load, that any time price interacts, this is the inside bar low. See how we see this, and then we get this big reaction off of it. Price comes in, changes structure here, we trade it looking for internal liquidity targets, right? And it will be the same, any engagement with this at the highs. We run the high, come back within quite quickly, yeah? We don't want to see price dilly-dallying around outside, yeah? Look at it here. Right, exactly the same thing. What happens here? See, like it's like a V-shaped recovery, yeah? You can see like that there's impetus, right? Price kind of dips its toe in the bath. The bath is scalding hot, so it pulls its toe out really quickly, yeah? What it doesn't do is like it does here, kind of dips its toe in, comes back a bit, dips its toe in again. That water's lukewarm, yeah? You don't have a quick reaction and a market structure shift, yeah? In here, the same. Price comes in, yeah? Quick reaction back out. Drives down, quickly gets out, leaves displacement. That would be a legitimate place to go long, yeah? Here, not so much. Price is just kind of dithering. I wouldn't take this. However, here, this is the real clear and obvious one, right? Look how muddy and how messy this is. Price spends too much time underneath it here, right? If we expect buyers to be stepping in, we expect them to step in quickly and aggressively, right? What does it do here? Dips back in, boom. Look at that move, yeah? Flies up to there, takes out this high, takes out this kind of interim high here, But let's just use that one because it's a bit more clear and obvious. What do we get? Beautiful displacement higher. Do we have fair value gaps? We absolutely do. Where's our fair value gap? Down in discount, which is this one. That becomes our entry. Do it in green again, so we stick. You can always, if you use your PD ranges and that, when you're reviewing your data, you can always leave it there and just kind of pull it back to here, and you understand why you targeted that fair value gap and not that one. Stops have to be below this low, especially the fact that we've got a fair value gap below it, right? And then again, we're just chasing this into internal targets, right? So I like this clean high here, something clearly stopped the market there. We've got our entry here. Our stops are in below this low. And then we've got our ready-made target here for a nice 3.4R trade. All right, so that kind of just a brief explanation for people on how mother bars work. But in terms of what Yusuf's asking, I think this is right, Yusuf, and please accept my apology and do let me know if I'm incorrect in my interpretation of this, is kind of what one we would favor, yeah? So just to give you an example, see this inside bar here, right? So see how we've had this structured kind of run down here, yeah? And then we've got an inside bar here, yeah? So let me just do it in a box quickly, and this will obviously only represent the mother bar, right? But there's our inside bar. What happens? We run the low, come back within, we trade it to the high, yeah? Now, how do we know when this mother bar becomes obsolete, yeah? Is then when we establish and start to build structure outside of it, yeah? Then our assumption is that we're then looking to attack liquidity resting above these old highs, okay? Now, also within this, we have another inside bar pattern. With this, I believe, being our mother bar, yeah, just. Now, what we see here, let me just delete this one quickly, is the price, we set the inside bar, price runs this, we're thinking, right, if it comes back within, we're looking to go short, it doesn't. See how it consolidates here? Yeah? The consolidation above this shows us that this should now offer a platform of support, yeah, before price moves higher. So that's how you can work between mother bars. But what I'm looking for always is that original mother bar, yeah? So in this case, I'd be looking at that, but my thought process would only be on this one here, because that's the kind of origin of this range, yeah, is here. Okay, so hopefully that makes sense, mate. And I do apologise if I didn't really kind of cover that fully, or my interpretation of it was wrong. But what we can kind of take from this today, and looking at this in terms of if we are applying this to our inside bar, is that this just looks weak, right? Look at what we've done. When we ran this mother bar low here, what happened? We had a huge expansion back up to the high, yeah? What happened when we ran this low here again? We had a mild expansion and run higher, but it showed a lot of weakness, right? Then what happened? We've then run the mother bar low again, and we've had no reaction, right? It's run it, and it basically looks to me like buyers are just exhausted at this point. So then my attention turns to these, right, which are all really lovely liquidity targets. We know there's loads of juicy stop losses resting there. That for me is then where I think price can look to purge and revert, or maybe go deeper into these and then revert. But basically, we just want to list the areas that we expect a reaction and then monitor it from there. All right. So let me have a very quick run through, guys. Just going to look at a couple of questions quickly, take a sip of tea, and then in the next 7 minutes, I'm going to try and do a quick top down on FEC, Smartdex, and Mexi. Yeah. Yesterday you didn't take a trade because you couldn't see anything. Yeah, no, I agree. I think it was just choppy, Craig, yesterday. I just think the best thing to do is just step away from it. I didn't trade yesterday, didn't trade Monday. And people say to me like, yeah, but you're supposed to be putting trade pools out. What we do, we obviously only want to put out ones that hit our systems and ones that we think are going to win. So one of the key things is don't force your trades, and just always remember, just patience is such a virtue. Go and look at Trader SC's Twitter profile, and for the love of God, follow that guy. If you're not, one of the biggest alpha contributors out there. But he's got a brilliant thing on his profile, and it just says plan one side of the screen, trigger on the other side of the screen. In the middle, it says this is where you F up. I'll be polite, don't want to drop the swear word, watershed and all of that. And And it's true. That section in the middle waiting for it, that is where people mess up. Nick, my man, hey, how are you doing, brother? So yeah, I think that's a really good lesson there, Craig. Don't force trades. I think that's absolutely the right thing to do. There was a cheeky little sweep of Monday's low on Tuesday, Craig. Nice little spot there from Whack, like that. But yeah, exactly. Struggle with confirmation off the back of it. Brilliant, guys. You are all thinking about this, in my opinion anyway, in the right ways. Yeah, just because you see it engage with an area you want to go long or short doesn't mean you take that setup unless you have confirmation or you see your trigger mechanism play out, right? Very, very good lessons in there from some very, very knowledgeable patrons of this channel. Oh God, I've still got that thing on again, haven't I? Do you know what? I think since coming off illness, I think my level of boomerism has gone up like at least 50%. Right, so FET. Let's take a quick look at FET. Let's do a really quick top down on this. Oh, right. Here we go. So daily, what am I looking at? Well, I'm bullish on FET. Tell you that right away on a daily scale. You legend. All right, then you have saved me an extra one then. I love you even more now, Erica. Thank you. So, Mex, yeah, no problem. Yeah, because I think it's on there anyway, isn't it? So, let's clear this up. What are we looking at here? The confusion of this on a weekly scale. This was our weekly order block. Price expecting to just get pummeled into this and rejected, pummeled and rejected, pummeled and rejected. But that is not why we are here or what we're looking at. So, let's hide that. By the way, that's still rinse and repeat at the moment, in my opinion. Rejection here, rejection here, rejection here, small rejection here, showing strength now. I'm just focused on recency, guys. On a daily scale, price is delivering from this bullish fair value gap, right? So what have we got here? We've got price delivering from a bullish daily fair value gap. Jesus, that's dark. Yeah, so if you're ever unsure on these, you want to leave them on your chart, just pop your FVG in, and then I just pop a little D after it as well. Craigie boy, sorry mate, we will make these so that they do all fit in your lunchtime at one point, I promise. Have a great day at work, mate, and a great week. I look forward to seeing you later in the week. Right, so delivering from this, above this bullish order block, for me on a daily scale, we're just looking to long FET here. I would have been long bias at the close of this fair value gap. Well, I still, in fact, I would have been long bias from here. Yeah. See, when we closed above this, that then becomes an inverse fair value gap. So I'm bullish from here, right? That's just the most basic way that I do that. So that's the candle that closed. So it's from this next candle. I'm still bullish today because we're delivering from this fair value gap and we're above this order block. No reason to be bearish, right? That's the daily bias. Now my next bias I'm setting on the 4 hour. So what am I looking to do here? Well, quite simply, I think we're going higher, right? Why do I think that when we're bearish? Because I want to wait for the close of this candle to do exactly what we just discussed on that last one, to inverse that fair value gap. We didn't close above it here, but if we close above this one here, we're going to find out in about 3 minutes, then my expectation for FET is to start attacking these highs. Might not do it, but that's my system and that's what I stick with, right? That to me is showing strength. We close above this, we inverse this fair value gap. I think this is looking to push higher. I drop down onto a 5-minute chart. What can that look like for me? Well, I want to make sure that I'm in the New York trading session, first of all, right? And realistically, what I want to see in the New York trading session, look at that beautiful liquidity target up here. You see all of a sudden when you then start dropping down how important they are. One thing I am going to be aware of are these relative equal highs here, right? So as we can see, you know, high of days miles over here, right? So, sorry, prior day's high is miles over here. So that is definitely going to be something because we've got that. I think what I would love to see, because these are equal highs, I keep doing that recently. So have a quick look here. Because these are equal highs here, for me, they always deserve attention. So you can just put them in there or you can label them up as equal highs like I've got on the menu, but that's really kind of what I want to be aware of. Now, what I want to see here is for price during New York, which is going to happen shortly, to leave those untapped. I don't want to see those run first. because that will mean that we've taken a key internal liquidity target. What I would love to see is this high has just been swept, is for price to draw down here into this fair value gap, which will be down in discount, and then to take a long setup into here, move my stops flat, and then look to trade that up to there. That for me, I think, seems like the high probability setup here, because we're bullish on a higher time frame. We can see as we overlay our premium discount range that that's the fair value gap down there. We can come into here, see a strong reaction and push higher. I would be a little bit more cautious if we ran that first, right? But that would be my thoughts on FET, guys. So I hope that was helpful in some way for you there, Yusuf. Let's now take a look at Smartdex, our dear partners token. Really, really like these guys. They're the only kind of decentralized exchange out there that are doing really, really big things towards avoiding impermanent loss. You can't avoid it completely, of course you can't, but the mechanisms and the technology they've got putting that in place are really, really impressive. So let's just add it new, actually. I'm pretty sure I've got it on there. Yes, okay, I've got the spot one on there, haven't I? So let's take a look at the one on Mexi for our lovely Erica. Here we go. So daily, what are we looking at? Remember, we are most interested in recency, and actually this has got a fairly solid structure to it, right? So we can see down here, not many FVGs. For me, I'm clearly bullish here for a couple of reasons. As soon as we set that bullish fair value gap down there, and first of all, we then fail to reject off of this order block, right? Close above it. And then the ultimate for me really is this inverse fair value gap, right? So now I'm saying, okay, well, if crypto's due a little bit of a pump and that, right? I try and stay away from too much of the news and bits and bobs. We've got a small fair value gap in here that price could reach for, but ultimately on a daily scale, that's the key high. So we now want to put this into a more translatable level, right? So we're going to drop this down onto the 4 hour now. Look at this and say, okay, well, what can our trigger mechanisms be from here, right? So there's nothing like crazy clear and obvious here, but what I would say is we're delivering still from a bullish FVG. So this remains in line with our bullish high time frame bias. Absolute dream scenario would be for a slightly deeper pullback into this and then look for long setups there. You can obviously also use like the 15-minute time frame too. Now you can see here with these really long wicks, this is just showing that this is quite a liquid, right? Which isn't surprising. It's a relatively small token, you know, trading on Mexi and some other specialized exchanges. So I would probably, you know, I'd probably for safety here and just for clarity of read, I think I would be looking towards the hourly here. But basically, I've got two plays for this. We draw back down into here in New York, right? And then we look for our nice sweep pattern on the lower time frames, retrace into that fair value gap, target 1, target 2. Yeah, that would be the kind of dream scenario for me. And even here on the hourly, right, we can see that what's currently kind of supporting price is this bullish fair value gap. Yeah, but we also need to be aware that we are currently delivering from this bearish FVG, right? So again, look how that lines up with our liquidity target here, meaning that if we draw down into this and we get our setup on the lower time frame, this is still a valid target and still has a really good risk to reward. So we just de-risk here, yeah? However, if we want a lot more confirmation, bearing in mind our, you know, real daily target is so much higher, it's all the way up here, yeah? Then what we can do is, regardless of what price does down here, we want to see an hourly close above this, and then once again we move to the lower time frame, look for that sweep, that move higher. We would be aware of this high, yeah, and then ultimately we're looking to trade that higher from there. So that would be my thought on that one, on Smartdex, Erica. That's what I'd be thinking. What would kind of change my bias on that? Well, I think we've got good support coming in the form of that, right, which is on the H4. We've still got this inverse one here. I don't think I would be looking to short this per se. However, if you were looking to take kind of a lower time frame, kind of aggressive trade here, if we came into this and we saw this kind of sharp rejection again, lower time frame, looking for our sweep, and I think you could then say, okay, that's the next logical area of support down here. Let's say we got into a trade here. What have we got? Over 2%. So there's definitely down there. And that's a really good bit of information, that is, Erica. Thank you. Yeah, absolutely. Obviously, we get a little bit of an inside track on that, but it's obviously public knowledge now as well. They're going to be on there. So yeah, exactly. Be cautious. Always be cautious, guys. Just wait for your triggers. Wait for confirmation if you want confirmation. Or if you are someone that likes getting into the trades early, just appreciate that. You're taking a higher risk setup. You've got a higher risk to reward. Yeah, you've got a higher reward for the risk you're taking. So just really understand your data. Go back, test, fastidiously test everything. Yeah. Build all those data sets for yourself. But when you see things like this and they align with potentially bullish news, yeah, then all of a sudden you can say, okay, well, if there's a news catalyst here as well, we do get above this, I think the risk to reward, for example, on this trade setup, I'm not saying obviously we're going to go and run that higher, but let's imagine you wait for a confirmation setup here, and let's say you get long here, and let's even say your stops have to be below this low here. Right, there's always the potential for a really, really big trade, okay? And you would look to trim profit and manage your risk accordingly as you move through it. All right, guys. Look, I hope that's been useful. The time always flies with you guys on here. So I am going to dive back into my charts. I'm looking in the next kind of half hour, really, a couple of assets. I'm going to be looking at GBP USD as well. Now we're moving into the trading day for New York, or kind of the key areas for that, but mostly NASDAQ for me. 1:30 for NASDAQ is brilliant. James, you're very, very welcome, my friend. I look forward to seeing you back at the Nest, and we'll go and look at some trade setups together. Touche, you legend. How are you doing, man? It's good to see you on here. Apologies, I'm just literally about to log off, but not that you need too much refinement in your trading, my brother. A student of my very dear friend Dank, who is just one of the best in the game. Guys, if you have considered being part of a group, what I would say is just try different ones, find out what's for you. Obviously, I'm a big promoter of the Nest. It's the group that I choose to be part of, and I love my fam over there. I've got infinite respect for Crypto Burb and all of my trading brothers and sisters. But you can grab a free trial down in the description if you want to try it. You can also get all of our trade setups. We had almost a 70% win rate last month, which was insanely profitable. And we've been in and around that fairly consistently for the most part of the year. So we're going to be printing all of our stats. Everything goes out live. Everything's fully transparent. But if you do just want access to those, then ping yourself in there. You can join through our Partners Buy a bit as well, which means you just have to put a small deposit and then you get X amount of months of free access to the calls as well. But also, remember, you can reach out to me on Twitter. Yeah. So just pop yourself on there, BC_Richfield, and you can ask me some questions away. Yes, Touche, DCC is a freaking great community. Love DCC, obviously love my fam at the Nest. I think just don't be put off for paid education, guys. Don't overpay for education, but just realize that it's an investment in yourself, but make sure that you've got the right group, all right? Thank you so much to everyone. Touche, great to see you on here, late. James, legend. Erica, our lovely Erica, always on the stream as well. Craigie boys had to nip back to work. Nip Par, Whack as well. Yusuf, great to see you back on here, mate. Hans, my good friend from South Africa, absolute legend. Lil Bar as well. Mert, thank you for your contribution today, mate. It was really good to see you on here, as it was Crypto King 2. Always nice to see some new faces. Maori as well in there as well. Really do like that little sticker you've got there, Maori. Jao Conde as well from earlier. Forgot about that, Jao. Really good to see you on here, mate. Probably a little bit long for you. And obviously our wonderful Kelly Barker, all the way from New Zealand. I'm really sorry if I've missed any of you out, guys. Hopefully I haven't. It's been awesome to have you all here. Any questions on this when you run it back, do just ping me a message, reach out to me through the Nest, or you can do so on Twitter. All right, guys, have a fantastic week, a brilliant weekend. And I'm about to go and host a 3-day stag do this weekend for my best friend who is getting married over in Jamaica in a few weeks' time, which I'm fortunate to be best man for. So expect maybe a little bit of a slower pace on Monday, but we'll still go and get them. All right. Have a fantastic week, guys. Always a pleasure.